Hey guys, so today we're going to talk about ranging markets, so choppy markets essentially, which is the worst time to get in, just because mentally it messes you up. And so I just kind of want to walk you guys through how to essentially trade it, what to look at, what to avoid, etc. So if we have a zone right here, and this is on the 4 hour, so you're always drawing your zones on the 4 hour time frame, the major ones. If you want, you can change based off the time frames, you can change it to a different color, whatever. It's such a personal preference, whatever you guys think. So we're going to put the prices here. And so basically what we're doing is we need to look left to figure out why this was a reversal. So if we look left here, we can even look further left. This is an area of reaction. So this ended up breaking above. This ended up retesting that imbalance here. And then right here, we had some manipulation. And then regardless, it ended up closing below those two numbers. So 984 and 849. Okay, so those are the numbers to focus on. So we ended up testing in here. We ended up creating an imbalance right here. So once we got the reversal and we ended up respecting, so this went from Tokyo to London my time. So we got a London reversal and we ended up filling this imbalance. So this is kind of like the next zone that we would draw in here. And again, the zone cannot exceed 20 pips. Okay. So we ended up filling the imbalance during this was New York and Tokyo the next day. This was Friday, and then Sunday came in and tested in during Tokyo. And then we ended up reversing Monday morning. So essentially it tapped in, it filled the imbalance, and then we reversed. We had a small correction. It ended up respecting this minor structure in between and then ended up coming down for a second reaction. It ended up respecting those two prices again and then ended up coming to the major zone. As you can see, it tested into those prices once again. We had a full two reactions, 1, 2 at those numbers, and then it continued down. Then it came back up, tested in again, came back down, and then finally we got a break. Now, here's the thing. It gets very, very frustrating when it does this, even though, I mean, between each zone, it's like 268 pips. That's a lot, right? So even though it does give a lot, it's annoying when it doesn't fully trend, because when it fully trends, it's so easy. Like, it's so easy to add in positions because it's moving, right? But when it's choppy, I call it ping ponging. It just mentally, it's annoying, and you get impatient, honestly. And if you're in time zones like me, where I'm sleeping from London to New York and, having to set alarms and stuff, it's a lot, right? So how you manage this is two things. You can trade a ranging market if it gives you more than a 1 to 3 minimum risk reward. If it doesn't, it's not worth it. Another thing you can do is, like, let's just say you sold here and you took your profit and then it came back up again and you sold here, but it couldn't break past these two prices in the middle of minor structure, and then it ended up reversing, and then you sold again, and then the same thing happened where it didn't even reach this minor structure. It reached in between here by that 500 mark. If that happens, honestly, you just have to manage it properly. Instead of having a gamble mindset, you need to just follow what it's telling you. So the more times that you enter, you're going to get frustrated because you're going to think, okay, it's going to break, it's going to head down. But realistically, in this moment, it is bullish, right? And then why it went to here is because the next major reversal was at this point, right? So you always look to the left. Whatever happens to the left repeats to the right. It's a repetitive cycle. So it comes up to that price. Let's get those prices in there. And then basically it taps in once, twice. We have two reactions, and then it continues down, right? So a couple ways, like I said, if it continues to range and doesn't break out, take your profit and just wait for the breakout, honestly. So obviously this continued to break out. And again, we're selling, right? We're not buying, we're selling. And the worst thing that you can actually do is sell and buy at the same time. I highly recommend not doing that because of the fact that it messes up your mental mindset. So you will it's major confusion, and you'll begin to gamble and all that kind of stuff, and you'll over risk, you'll get greedy, whatever. So stick to what you are choosing. So in this case, you're sticking to reversal. So stick with a sell. So what we want to do is we want to wait for the accurate sell price to sell off. Okay. So we want to wait for that precise timing. It's all, honestly, when you're entering and exiting, it's all about the right time. You're not just going to fish for trades every single day and enter at random times. It has to make sense. You have to pre-plan it ahead. So obviously, we would wait for a breakout either below this structure at 189 or above this structure, and then we would see, okay, what's the next reversal on the left-hand side? Well, the next reversal is near the 250 area and the 400, essentially, okay? So what we would do, we would wait for the breakout. You can set an alert at these prices based off what we see here. Once you get the reaction, so this is the first reaction, it tries to manipulate, it tries to get buyers to come in. So they try to screw people, try to get buyers to come in, they take their stops, and then basically they get buyers to come in again, they're absorbing all the orders, and then they drop it. Well, it's clear to us that it's going to be a reversal because number one, on the left-hand side, it's a reversal from here, and you can kind of measure how long or how much it's been dropping, which is 1,300 pips. Another thing that you can do is you can go to the JPY index and make sure that it's strong, right? Because if it's dropping, that means that the yen is strong. If the yen is weak, then that means GBP is going to continue up. So you can kind of get more confirmation on that. So it ends up hitting once and twice. And so this would be a very nice sell area to get it on a lower time frame. So you're marking up on the 4 hour. You can do minor zones on the 1 hour, and then the entries are going to be on lower time frames, just because you're going to see more price action at that point. So you can see 1, 2, 3 reactions, and then you can get in based off that specific price. Once you're on a lower time frame, you do go back up to a 1 hour or a higher time frame, just because you want to aim for your target. If you stay on the lower time frames, it's just a disaster. You're going to want to get out early. This is why people only get 1-to-1s and 1-to-2s, because they're staying on lower time frames. The goal is to intraday trade, so take it for a couple of days or swing if you can, but it takes time. It's a lot of time. You got to start small first, but yeah, so you never stay on the lower time frames. You get your entry on a lower time frame and go right back up. So your stop loss depends. I would have it above here, but it depends on where you get in on the 5-minute. If you get in on or the 10-minute, if you get in on the 10-minute and you're getting in like right when it closes, I mean, your stop loss could be closer, right? But I like to have a stop loss between, I'd say 15 to 30 pips, 30 pips max, because of the fact that if it does spike one more time, then you don't want to keep getting stopped out and then it goes in your direction. Like, that's the worst thing you can do. You want to just have your stop loss there in case you're in the total wrong direction. So once you identify that entry, then you can just follow through. So this is the next major target. Now, in between here, sometimes it does correct. You can add in other prices just to make sure they're breaking, just for extra confidence, honestly. So you can do that as well. So this is the major structure. So it obviously broke and tested once, twice, and then continued down, right? So this is already a 1-to-5. Almost a 1-to-6. And then we have to make sure this next structure breaks. So it tests in again, and then it continues all the way down. So sorry, I should have drew out a zone here. So between this zone, between these two zones, again, is, okay, so 162 pips. So it's normal for it to correct just like it did here. So what you can do is you can, like I said, you can just add in extra prices based on the left and make sure that they're breaking below. And if they are, then you're good to hold your trade. You can even enter extra positions on these break and tests on a lower time frame or even at the major structure. It just depends on what you're prepared for. Another thing is setting alerts so that when your alert goes off, you don't have to be constantly staring at the chart. You just base it off of a specific price. You set an alert. Once it gets there, you enter. You want to make it as simple as possible. And so anyway, it tests in 1-2 reactions. It holds those 2 prices, and then you can keep extending your target. So this was September 2nd. That was a day, and that was almost a 1 to 13. Right? So all you're doing is looking left and following through. Now, if we look on the 4-hour time frame, we need a massive breakout because it's still ranging in between. So we need to make sure this breaks in order for it to continue down, okay? So this ends up so the first reaction coming in ends up manipulating. So again, they're trying to get buyers to come in thinking it's going to go up, even though it's a sell right now. And then they're going to absorb their stops, and then they're going to do it again. So you have to count the reactions. So once it closes below this 475 area, so once it closes below that, you're going to enter, or you could just keep extending your target. See how I added in these extra prices and it tapped into the T? You want to make sure that this holds and then it continues down. Then it actually breaks and tests that 845, and then it continues down to that next major structure. Okay, awesome. So looking at the 4-hour time frame now, we need to make sure we stay below this 189 area because this needs to stay below in order for it to continue down. So we need a full breakout. Okay, so let's just see if it does. Okay, yes. So it goes to this next area. Where is this next minor structure? So it goes to that next minor structure in between here based off these prices. And you can look far left as you want to. Sometimes when there's a lot going on, you have to add more in, but it's fine. Just focus on what the direction is. So it ended up coming to these 2 prices, ended up testing in, and ended up retesting that number that we had there, ended up closing, came up and tested again, closed, and then it starts to drop. Okay, so another thing that you guys can do, and I do this all the time, is if you're not very confident about a specific trade, instead of even getting it at the top here, and let's just say you miss it, you know the next major structure is at these 2 prices. So what you can do is you can let it react, and if you're not prepared to get it here, wait till these 2 prices, because we know this is major structure, wait till these 2 prices close below and retest, and then you can get an entry here. You could actually get an entry on any of these areas, honestly, on a lower time frame. So if you go to the 5-minute, so this was that major reaction, the first one. Where did it go? Here. So so you could get it here on the 5-minute, and you can get it way before down here. I'm just saying if you want to wait for that particular major zone to enter on, you can enter on the 5-minute time frame and get in between, and all you're making sure is that it's breaking and testing. So that's another way that you can do it. So it's all about timing your trades and setting alerts, and then understanding like what exact times it's moving at. Is it moving at 7 a.m. every day, my time? I'm mountain time. Is it moving at 6 a.m.? Is it moving at 1 a.m.? Like, you have to know the exact times and what days it specifically moves at. And if it's not at that particular zone or price, then you don't enter. So you have to have a set of rules, and you have to make sure you're paying attention to journaling and stuff like that. So I use a journal. I have to still update from last year. I don't really journal anymore because of the fact that I've been trading for 10 years, but I just do this for my group to make sure that they're doing this, especially when you're first starting. And also a trading gallery. So, putting a before and after and explaining what you saw and what the end result was. So this is a really good program you can use to track all of that. So yeah. Anyways, I will end with this. Make sure you like and subscribe.